Hi everyone, today let's talk about the Fed cutting interest rates, but the long-term rates going higher. And then of course we'll take a look at all of the longer-term charts as I'm now back from my course and we'll get back into my normal production schedule. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So while I was gone, the Fed did cut interest rates, and now we are seeing the long end go just a little bit higher. 10 and 30-year yields rose despite Fed cutting interest rates, and I wonder why that is. Of course, we'll take a look at all of the charts, and perhaps the long end believes we're going to have to cut further in order to stimulate the economy. Maybe that's something that we're seeing. And 10-year treasuries did jump just a little bit. 30-year treasuries also followed closely before turning around, turning a little bit lower here. So of course, we'll take a look at it on the charts like I mentioned. But with that, we do have a pretty flat yield curve with 4 to 4.25, and you have the 10-year sitting pretty much in that same range. So pretty flat across the board. I still think the short end is probably going to come down a little bit, and the long end will probably remain generally where it's at, which is when we'll see that more steepening of the yield curve. So what that's telling me is investors do not really believe the Fed, that they're only going to cut a few times. We're going to see a little bit more aggressive cutting from the Fed over the end of this year and early next year, and that will re-steepen the yield curve with the long end staying basically where it's at. And that's kind of what they highlight here. The markets are looking for terrible news, which would move a significant rate cut, which then at that point the long end would be still quite a bit steeper than current rates. Looking at fear and greed, we are at a 62. You can see we did dip here over the time that I was gone. We were in the kind of 50s to low 60s, and then we had a little bit of a pullback there, and now we're kind of rallying out. Still kind of a neutral range, not overbought, but not moving lower either. So still feels like a melt up, and the charts kind of looked like a melt up in the brief review that I did here. You can see continues to look up and to the right. Nothing really changing. Always up is still the thesis. Price strength, extreme greed, breadth, still not really going in either direction, still neutralized there. Put call ratio is very, very low at a 0.57. That is the lowest we've seen here in the last 12 months. That's a little bit concerning. VIX slightly elevated off of its lows. Interesting there as well. And then junk bonds. This is kind of mirroring that thesis we just talked about, that there's a little bit of fear between investment grade and junk bonds. That spread is a little bit elevated here. Not too crazy, but definitely showing a little bit of fear on that metric. So kind of mixed markets, but still up and to the right. Moving over to the AAII survey, the bears got really aggressive here last week at a 49.5. Definitely would not have expected that high of a number considering what markets looked like. You had a really small pullback relative to what we've been seeing on the broader market. Small pullbacks there, but here you can see the bulls are back at a 41.7, neutral squeeze to probably the smallest metric I've seen. Lots of bears, lots of bulls, neutral, not so much. So it'll be interesting to see how that plays out. To me, that means we'll probably see a kind of larger swing in one direction, but that's pure speculation. Don't have any data to support that. That's just kind of what I think the psychology would look like. Moving over to seasonality. Right now, it looks like we are following that normal year where you're kind of peaking out here at this middle of the month time frame with higher levels and rallies. It looks like into the end of the month we might see just a little bit of bearishness. Remember, this is post-election year, so we should have been a little bit weaker here, but is this going to play out? That's kind of the concern. Either way, right now, still in this kind of bull rally. Does it continue here, or do we see that break? And then looking at that calendar here, you can see week after the triple witching tends to be a little bit bearish. Bearish Monday, Tuesday, bearish into the Thursday. You have restructuring of portfolios into the end of Q3, which generally results in a downward move there of just a little bit, about 1%. So just consider that. Could be rallies into the Friday. Do have a little bit of data, soft data, new home sales, durable goods orders. GDP Q2 I think will be interesting on the Thursday, and then you get PCE data on the Friday. Moving over to the calendar, like I said, there's not a whole lot on here besides GDP on the Thursday. Those GDP numbers are going to be interesting. They should be in line with expectations, in line with the previous numbers, so that should be good for markets, but you never know. And then PCE data on the Friday, corn headline PCE numbers. Everything else is kind of tangential. Moving over to the charts here, it looks like up and to the right has been the thesis over the last 3 weeks. You can see we kind of flattened out as I got offline here. Flat week the following week, dipped a little bit to support, and then we've rallied out. Right now, your price target is going to be around that 6,900 range, which gives you about 3.5% of potential upside, resuming that bullish momentum. RSI is overbought on the weekly chart. That's the first time we've seen overbought conditions for a long time, going back to really December time period. We hit that 69.5. Current RSI is a 70.17, but I suspect that we're going to get that continuation push to that next trend line. That was kind of the mark of that high structure through basically all of last year. Then we pulled away from that and dipped. I think we're going to get back to that before we see a major reversal. Again, that gives you about 3.5% of potential upside over the next week or 2 weeks. And then looking at that daily chart, again, very, very aggressive, slight hesitation here, just trying to get back in the feel of it, what we've been seeing. A little bit of hesitation here and there, but over the last couple of weeks, obviously straight up. You have a short-term price target around that 670 area on the daily chart. That is the trend line that we were watching back here, marking this structure up, giving you about 1.5% to that target. Again, super overbought. We'll see if it can continue to run. 72.56 is the current RSI, but momentum bullish, RSI bullish. Just continues to be a pretty aggressive rally. Moving over to the Tasty charts here for the SPY, you can see we are at that upper ATR band. Finally got to that level. That is usually the level we start to see pullbacks. You can absolutely push through it here. You can see got above it and then eventually pulled back a couple of weeks, giving back several weeks of gains here. Same thing here. Got up to that level, 3 weeks of pullbacks. And then as we started to pull away from it, that's when we started to see some concerns. So upside potential, maybe a little bit less so now that we've hit that upper band. Right now, that level is going to be 663.50, current price 663.61. So we're above that level. Just keep that in the back of your mind. Upside potential is probably more limited now that we've hit the upper limit on that weekly chart. And then same kind of thesis here on that daily chart. Did have a couple of days of hesitation, bigger push on the Friday, upper ATR band 665.61. So it gives you potential for like a $2 move there. And then we'll see what happens. Are we going to pull back to that 8 EMA? As long as the 8 EMA continues to be a zone of support, really the 21, still in bullish conditions. So nothing says we should pull back immediately, but we do have to watch closely, as those upper ATR bands tend to be a pretty accurate measure of where we're going to see at least a slowdown, if not a turning point in markets. Moving over to the NASDAQ here on the weekly, same kind of thesis. You do have this structure here, which continues to hold. That would give you not a lot of upside, about 2% to that next level, so not too bad. Momentum's back to bullish again. RSI overbought at a 70.56, so very, very high levels. In terms of long-term overhead resistance, you really don't have anything up until this 28,000 area, so lots and lots of room there, but your short-term level is closer to that 2% area. On the daily chart, however, it does not look quite as good. This looks a little bit more like a rising wedge pattern. You don't have those consistently higher highs with the same kind of follow through. So it seems like we're tightening up here, getting ready for a potential move. The momentum still very, very bullish. RSI, again, very expensive at a 73.69. So across the board, showing very overbought conditions, but continues to be a grinding up into the right pattern. So these kind of melt-ups can last a while, even if they are in overbought conditions. Moving over to the NASDAQ, on the Tasty charts, you can see that upper ATR band, 598.46. Hit that level this week. Are we going to see another turning point there? Certainly a possibility. You can see last time we had a nice rally into it, had 3 weeks of downward movement immediately following. Same kind of movement here. Once you got to it, grinded a little bit higher and then started to fade and had that bigger pullback. So just keep in mind these upper ATR bands, especially on the long time frames, tend to be pretty accurate, and that is where we are already at that level. Current trailing stop, 545.39 on the weekly chart, and then that daily chart, same kind of thesis, already super overbought, way above that upper ATR band, 597.16, trailing stop 580.48. Did see some volume coming through on the rally. It'll be interesting to see if there's any kind of follow through with that. Are we going to see continued pushing, or are we going to be extended? Like I mentioned, you can see usually when you're above it doesn't last long. You can kind of grind along it for a while, but we are pretty well extended above that upper ATR band. Moving over to the Russell here, you can see really important double top being tested here at that 244.46 level. That was the peak level back in December of 24 before we had all of that tariff stuff that made us move down quite a lot. From top to bottom, that was about 29 to 30% of a pullback on the Russell, much bigger of a pullback on this chart versus the others. But then we have now retraced all of that rally. We are now flat to that level, 244.46. You got some overhead trend resistance as well. Overbought conditions, pretty close, 68.86 on the RSI. So huge volume. Don't love to see that, right? So when you get big volume coming through at pivot points, that could be people taking a lot of profits off of this rally, starting to take that profit off of the table. And then if you'd see a reversal here, that can be a pretty aggressive move because we are very, very extended. Of course, you can see 200 SMA sitting all the way down here around the 200 level. If we were to see another retracement into that zone, of course, that would be about 18 to 20% of a retracement. So again, I think this is a critical level here for the Russell, watching that for a potential double top. Does this start to become more of a kind of sideways choppy market over the next couple of months to potential years? That is very much the concern for me, especially at these relatively higher PE ratios. And then moving over to the Tasty charts, similar thesis as the others. That upper ATR band, 244.74, continues to kind of curl up here just a little bit. Big volume coming through at that level. And you can see what I was talking about. You had big volume come through at this pivot point right here. Big volume at a very extended level. And then off of that move, we had a nice continuation here. Now we're starting to see volume come through at another potential pivot point. Is this going to be the start of at least a little bit of a retracement? That is the concern. But for now, still very much bullish structure, still very much extended, and could continue to stay that way for a while. Moving over to the Dow here just briefly, you can see it continues to be very powerful up and to the right. Good volume coming through, momentum still bullish. Not as overbought as the other major indices, even though we are at all-time highs. Gave this a little bit of structure here just for some overhead resistance to consider around this kind of 469.25 area. Marks a top here before a bigger sell-off. Same here, hit that level, pulled back a little bit. Seems like we have just a little bit of room until we hit that level, about another percent and a quarter, somewhere in there of upside, and then we'll see what happens. Does this continue to grind through here? Longer overhead resistance is around that 487.50 area. Moving over to the SPY divided by the Russell and the NASDAQ SPY here, you can see NASDAQ leading, continues to go very nicely to the upside, so that is bullish. NASDAQ leading us higher is bullish. And then we finally got that bigger pullback on the SPY Russell. So the Russell has been doing really, really well. Small caps have been undervalued. We've talked about it for a while. And now that is continuing to be true. Is this going to break structure a little bit more? I think that's certainly possible. But of course, we have that double top on the Russell that we have to consider. Either way, though, this looks like a topping pattern and a breakdown with a low, lower, low. I would expect a lower high and lower lows here, which means Russell outperformance over the next couple weeks. Moving over to the SPY divided by the M2 money supply, got another push to that next level at 30.14. Didn't think we would see such an aggressive rally, but it has been massive. Pushing to that next level, 30.14. That is kind of in the middle of this range. Going back to the dot-com bubbles, this is your dot-com bubble for this ratio. The peak there is at a 32.71. You got a topping pattern closer to this kind of 31.64 area. We are almost as expensive there on the SPY versus M2 as we were during the dot-com bubble, and we are there once again in this kind of middle structure. Can we get there to that next level? That is something to consider. The other thing I wanted to highlight here, you can see the RSI, peak RSI was November of 24. This is the monthly chart. Current RSI is at a 69.87, even with higher prices. So you have some divergence on the monthly chart. And then looking at that weekly, right to the level, clean break here, right to the level. Next trend structure, let's go ahead and extend this out right to there or so. You can see next level would be around that 31.5 area, pretty much in line with that kind of topping pattern. Remember, the wick high was that 32.71 area. So this could absolutely go higher. It's not quite overbought yet. I would suspect once we get there, that'll likely be the turning point. And over the long term, still don't love this as a buying opportunity. I think this is very expensive. Moving over to Apple and Microsoft. Apple had a good week, 4.88%, very powerful, pushing through some levels. These levels continue to be valid here, right? So we pulled back the previous week, hit that level 230.28, touched it and bounced, got back above 235, held that as support and pushed to 241. So continue to play those levels, very, very good levels. The next trend resistance is going to be up here around 252, 250, 280 or so, and then that'll be in line with this kind of peak level back in February. We'll see if we get to that zone or not. Either way, though, your next all-time high is around that 260 area. I think you can certainly wait for a potential move there. It could be a couple of weeks before you get there. And then looking at Microsoft, had a little bit of a fade, 5 weeks in a row of bearishness, got back above the level, 506.71. Once we were above that level, held that level support this week and looking for a bigger push. RSI doesn't look super great here, so do consider that. You have clean divergence, breakdown, look for that retest of the SMA, and then if you get the retest sell-off, that is going to be a change of structure for Microsoft. So is this the start of a topping pattern? That is potentially in play for Microsoft. Moving over to Tesla and NVIDIA, what a move on Tesla. Pretty upset to have missed something like this, but you had a pretty good setup. 21 EMA on the weekly chart was continuing to hold support here through June and July, and then we did get that rocket ship move here over the last 3 weeks. Big move, 5%. Following week was 12.5%, clean through this level here, and now you're getting very close to the highs from December. Next level is around that 500 level, which is really just that psychological level. You can see the peak level here from December of 24. The high there is going to be 488.54. So looking to get into that 488 area peak levels. You are definitely overbought 69.64, but your support for 1450 continues to look very good. Momentum bullish, volume ramping. Definitely something going on with Tesla. Put it down in the comments if there was some news surrounding this that I missed. Definitely want to take a look and do some more research there, in my opinion. And then looking at NVIDIA, really this has struggled over the past couple weeks. Did not miss a whole lot with NVIDIA, a little bit of a pullback off of the level 180, came back to the level, tested it, and then sold a little bit more. Momentum fading, RSI fading. This is kind of what I was talking about on Microsoft, right? You have the breakdown, a little bit of a retest. If this continues to break down there, this is likely to be more of a topping pattern for NVIDIA. Moving over to Meta and Alphabet. Meta not showing much of anything, basically flat from when I got offline, but did show some bullishness this week, right back to those all-time highs. Is it going to push through here? Don't really have a lot of levels to work with, but I would watch this zone around here, around 791. Can we get a bigger continuation through that level? Certainly a possibility for next week, but look at Alphabet. This has had a massive move. That to September week, 10% on Alphabet. Absolutely incredible. Again, if there was news around that move, put it down in the comments and let me know as I try to catch back up on markets. Big 3 weeks, continues to look super bullish. It's right at all-time highs. Would expect this to continue to run. Once it broke that all-time high level here, that should have been a trigger for a massive move, and sure enough it was. Moving over to staples and discretionary, as you can see, definitely risk on markets here. We've had selling over the last 4 weeks for staples. Discretionaries continues to be really powerful. Broke through this level here, continues to show bullishness this week. So risk on markets for sure. Above this peak level here, which is your all-time high on discretionaries. Where can this go? That is where we start to think about things. I can extend this one out. That would give you a price target around the kind of 254 area. Are we going to get there in the near term? Maybe, maybe not. We're already definitely extended at a 68.49. But again, everything continues to look quite strong. Moving over to breadth, 20 and 50-day breadth. Really not a lot of movement here. Breadth is kind of low on 20-day considering how aggressive it is. Maybe not a lot of stocks are moving higher. We're being led by the Mag 7. That kind of makes sense, but would like to see this improve. Definitely would like to see that get above the 50 level. That would be interesting. And then looking at 50-day breadth, the same thesis, sitting right around that 50 level. Momentum's a little bit bearish. RSI is a little bit bearish. Don't love to see that as this kind of continues to fade and markets are going higher. That usually means the rally is not going to be sustainable. Moving over to 200 days, same kind of thesis here. You can see bearish for 4 weeks in a row. Starting to accelerate here to the downside over the last week. Momentum fading, RSI fading. Again, are people starting to take profits at these pretty high levels? That certainly seems to be the case. We're seeing some volume indicators. We're seeing some peak volume levels. And now we're seeing breadth kind of fading as we get into those peak levels. So all of those things say maybe this is a turning point. We don't really have the structure to validate that yet, but definitely some things under the hood to keep an eye on. Moving over to the dollar. Dollar threw a wick to this low here over the last week. Big wick low and then finished slightly positive. Is this the final move of that bottoming pattern? I think that is probably likely. This has been a big sell here for sure. Very crowded trade, big sell, finding support in this 96.85 level. Been watching that level for a while, threw a wick to that trend once again, and then got bought up quite quickly. Momentum bullish, RSI bullish, looking for this bigger move higher. Still needs to get above the 21 EMA and close, but again, low, higher, low structure. I still like this to go higher here on the dollar. Moving over to bonds. Bonds continue to look quite good. Glad to see that those are continuing to look good. You have low, higher, low structures with high, higher, high structures. Love that. And then looking at those weekly charts, even here on JNK, getting above this level here, getting above that 97.69 level. We're kind of in this waterfall space where there's not a lot of levels to work with, but structurally this continues to look good. So still owning bonds, still like those medium to long term. Don't love the move this week with TLT down about 1%, but still had a nice move here of about 2.5%, followed by another 1.5%. So slight pullback was probably in the cards. 89.16, would love to see it get back above that and push. With that 200 still sitting up here around 104, I think that's ultimately where we're going to go. Want to see this go to 92 and then that 94 level like I mentioned. Moving over to my accounts, of course, I have nothing on except for that dollar position. I've continued to sit on that dollar position. I do think we will see a nice move up on the dollar. Still plenty of time on this, and I do think we'll continue to go higher over the next couple weeks, which is a slightly bearish position. Kind of frustrating to have missed a really nice rally, pretty clean rally as well. It seems like everything was structurally in place for that to go higher, but now we are at those peak levels. I think I'll honestly be looking for some short positions. Of course, very careful with that. The structure is still very bullish, but we are hitting those overbought conditions on a lot of those charts, especially watching the daily and the weekly ATR bands. On the Tasty charts, that is likely what I'll be watching most, and then looking for some trend structures that support that thesis. Let me know down in the comment section what you think of the markets. Are we at that pivot point, or are we just going to continue to go lower left to upper right with moderate pullbacks? Or is this kind of a peak expensive point with the upper ATR band starting to mark that point? We're going to see a topping pattern here over the next couple of weeks. Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.